back to the Everyday Pro Investor YouTube series. You got Brian and Evan here. So we took a little bit of a break from our YouTube and podcast series. A lot of things going on, obviously, in the world, and we had to focus on running our business and making sure that everything was going smoothly there. We do the YouTube and podcast as a fun thing, and we didn't have time for it, but we're back. We're excited to get going again. And hopefully that you didn't miss us too much. We got quite a few messages from some of our watchers, but for our subscribers out there for the Everyday Pro Investor portfolio, you guys are seeing us trading and staying active. So if you subscribe to our service, you were staying up on everything we were doing, continued to make money as the market went up. And now we're getting here into a range, and it's time to start doing some analysis again. So Evan, I guess first and foremost, what are your thoughts on the market right now?
Yeah, so thoughts on the market since the pandemic crash, we went through an aggressive rebound period, and to me it appears that the rebound's kind of losing steam. I could potentially see a trading range being established here, I think it's highly likely due to the uncertainty of the virus, how that's going to play out in the later part of this year. I just don't know if it's possible for the market to retest its highs given that level of uncertainty. What are your thoughts there?
Yeah, I definitely agree. I don't see us retesting the all-time highs on the S&P anytime soon. Obviously, NASDAQ's been breaking out, but I think there's some exuberance in the NASDAQ names that have caused it to hit these all-time highs, and we're probably going to see a pullback there as well. I mean, some of these names, obviously Microsoft, Apple, they're well positioned for where we're at in today's world. But there is other NASDAQ names that are not performing, and I think you're going to see a change, and I think you'll see the NASDAQ pull back. But I don't see the S&P getting back to those all-time highs, to be honest. Probably anytime this year without a vaccine. I think there's too much uncertainty right now with everything that's going on. And the S&P 500's got so many cyclical-based names and travel and leisure names that as those underperform due to the virus, I don't think you're going to get back to those all-time highs. And I would completely agree. I think we're in a trading range right now, probably somewhere between 300 and 320 on the SPY, or 3,200, 3,000 on the S&P 500. I think that you're really, if we get a big pullback, it's going to be to around 2,900. And I think that's where I'd look to add, I'd probably go into the market pretty heavy at that point. Right now, I've been more or less taking positions off, trimming them as we trade up, near the top of that range. It's hard to put new money to work right now. You can be selective, but it's hard to. I'm not going to go buy the S&P 500 index right now. I don't think that's a good play.
Yeah, it's really tough to. Although you'll have companies that are going to continue to do well, as more and more companies adopt the work from home policy and whatnot. You're still going to have companies being successful throughout this period, even if the virus delays the reopening of the majority of the economy back to 100%. But when you have like travel stocks, travel companies that are still going to be impacted due to the delayed reopening, although I did just go look at a number of charts, airline, cruise lines, travel industry. They actually the chart is set up, it looks like they do want to pop. But with the delayed return, I know some of the cruise lines already voluntarily delayed their reopen date. Can we expect continuous delays if the virus count increases going into the fall? And my question is, how long could some of these companies make it?
Yeah, I think you're going to see, the cruises pushed back till the end of September. They were supposed to kick off August 1st. I think we're going to get into September, given the current environment, and you're going to see them push back again. No matter what you believe on the virus, whether it's a vaccine, it's got to run its course, whatever the case is, neither of those things are going to be here by the end of September, and I think you're going to have a lot of people hesitant to go jump on a big boat and go to the middle of the ocean with thousands of people in a confined space, given the virus. So I think we'll get to September. You'll hear the cruise lines push back. Air travel still remains down about 80% from where it used to be. I think that the cruise lines, given the debt they've raised, are in decent shape to make it most of them can make it at least 6 more months without any trips. and a lot of them can make it 12. Airlines, there's only a few that are actually in good shape. Delta's in okay shape. Southwest is in pretty good shape, and Alaskan Airlines is in pretty good shape. The rest of them, you don't want to touch American. You don't want to touch United. Uh, they're in bad shape, and I think that those I would play the airlines through options because you can get long dated options at a pretty decent premium, and it limits your risk, right, and gives you a lot of upside. But the travel stocks, I think, no matter what the charts look like, without a catalyst, I think you're going to struggle to go higher unless some day traders jump on it again and start pushing this thing up. But you talked about individual names that can perform in this type of environment. Kind of moving on to our next segment here, doing some single stock analysis. Salesforce, right? Ticker symbol CRM. That's a name that absolutely can perform in this type of environment. They're kind of like the kings or the originators of cloud, and they're positioned pretty well. And we've been making a few moves in this name. You want to talk about a few of those of them?
Yeah, so we started monitoring Salesforce about a month back, and we did put on a call spread about a couple weeks ago now, around 182. That was a trigger to buy the spread. It was a 185, 192 and a half spread, July 17. Made money on that and sold it for, I forgot what the return was, but it was a good, it was more than a doubler, I believe. So we sold that spread, and then we watched for the next buy signal because we really like the company. To your point, my buy signal for our portfolio was 195, which hit last week. To us, that was a breakout signal based on the chart. We bought shares again because we want to own the company. And then I'll let you talk about the portfolio's option in addition to the spread. What else we did, if you want to touch on that real quick.
Yeah, so in the everyday pro investor portfolio, we haven't bought the shares yet there because we were holding some options positions. We didn't want to overweight that portfolio. We were holding the July 200 calls. We had spotted some unusual activity in that name a couple weeks ago. Initially, like a day after we bought it, it popped almost 50%. We sold a little bit off. Then the name pulled back. I wish we would have added to that position at the time. It was a mistake. We should have actually added back on, brought our cost basis down because we were still really confident in the chart. Didn't do that though. We let it break out, and then we just actually unloaded the last of our 200 calls, making about 60% net between the two different sell points that we put out there. So a nice little return. Salesforce trading around 198 right now, but it did get up over 200. And I think right here is a good point. If you haven't already bought the shares, I think you can buy half here. And then if you get a little bit of a pullback to retest that breakout level at 195, it was pretty strong. I mean, you had it tested that 195 level 3 times this year and finally broke out, gave you pretty good confirmation getting up over that 200 level. You could retest it, but I think it's going to provide good support and offers you a really strong area to go ahead and add as a long-term position to your portfolio. But I wouldn't be afraid at 198 to pick up, 50% of what you're looking to invest in the name. What are your thoughts on that strategy, Evan?
Yeah, absolutely. And our initial thoughts with this company going into the pandemic, we were cautious because this company needs seats in the workplace. So the pandemic period obviously will have a negative effect, being with unemployment increasing. But they're positioned really well, and as companies adopt and grow the work from home policies, I just feel and we feel that this company will do really well over the next 12 months. So to your point, buying now, I mean, I just put on a buy at, I think it was 195 or 196, and the price is trading just below 200 right now. Great time to put on a first position, to your point. If you do get a pullback, especially if it comes back and tests the 195 level, I would say that's a great time to put on the rest of your trade. But I expect this company to do pretty well over the next year.
Yeah, one last point on Salesforce before we move on. Mark Benioff, CEO. Oh man, he's been there, from the beginning and whatnot. But he's a brilliant CEO, and when we look at ESG investing, right, it's becoming a bigger and bigger trend. Salesforce is absolutely a top-notch ESG company. They're very in tune environmentally. They've got great governance in the company, and then they're very in tune with what's going on socially. And Mark Benioff's a big pusher of doing right by his people, even at the expense of the company at times, which sounds terrible from a shareholder standpoint. But time and time again, data shows that when you treat your stakeholders, all of them equally, and treat them well, so putting your employees' well-being and mental health and everything as a top priority, you get more productivity out of those people, and in the long run, you get rewarded. So I think that that's just one last kind of, it's the feather in the cap on why this name is going to continue to perform. Outside of all of the other reasons, ESG investing is becoming bigger, and people will invest in this company just because of what they call the ESG score. Moving on from Salesforce, though, let's just talk a little bit about sectors, where we're looking, what we're trying to do here as we look at the market being near a top and everything. And I would say that the one area I'm seeing right now that really looks promising is silver, gold, the precious metals. You look at the commodities cycle in general. Commodities generally, they have pretty long cycles, like 5 to 10 year cycles. And when you go back 5 years, you look at gold, you look at silver, they've really been in a trading range, a pretty big trading range at that. And gold's finally broke out. And I think silver's coming next. I don't know, what are your thoughts kind of on the whole precious metal space?
Yeah, I think you nailed the gold breakout, and I still think there's room there, being that the gold crashed with the market primarily due to just people trying to liquidate quickly gold to be able to cover any type of leverage plays that they had out there. So the gold crashed, and then as gold rebounds with the market, you should see a lot more market fundamentals kick in. So I would expect even more out of gold, possibly headed towards its all-time high of 2,000. I don't know what your thoughts are there, if there's a chance for it to retest it. But honestly, if it did and it hit 2,000, I think it would set a new all-time high up beyond that as well. So before talking about silver, what are your thoughts about that?
Yeah, I think what you're going to see, you mentioned how gold really had tracked the market, the equities market, and you're starting to see some decoupling from that, which is good, because the reason gold's going to outperform, right, is that you've got a zero interest rate environment, you've got the Fed just printing money, you've got central banks around the world printing money, and so gold is a hard tangible asset. And you're going to continue to see people kind of go into that name and are willing to pay more for it as money becomes, I don't know how to put this, but basically it becomes less stable, would be, I guess, the right way to put it. The more money you print, the less value it's going to have. The more we keep getting into this thing, it seems like that, it's funny money. We're on fiat currency. You just keep printing. And they're kind of showing you that these central banks around the world can just print money, and it really doesn't matter what they do. But at some point, the truth is basic economics says that you're going to have a problem eventually when you just keep printing money and it's all debt-based. So I think that people are going to continue to pile into gold, and I think you're right. I think it could go to a new all-time high unless we get some crazy economic change and we start to see interest rates go up and really positive economic activity. But I don't see that anytime soon. I see gold going back to 2,000, maybe higher.
Yeah, and then with silver, to your point, the gold-silver ratio is attractive right now for silver to catch up. And I know we're playing that through some August 18 calls. But the silver, I know silver and gold, they function a little bit differently. Silver being that it's used more in manufacturing. So does the demand for silver come into play at all when we talk about silver price action?
I think it does a little bit. And I think that's why silver's ready to catch up to gold. Gold has no real manufacturing or industrial use. Silver actually does. And if we see the economy start to heat back up, obviously you got the demand for silver from that side, but you also have the demand that people just want to be in precious metals because of their hard tangible assets, right? So you kind of got a double whammy there. And where the gold-silver ratio is at right now, silver is due to catch up. The chart looks really good. It looks almost identical to gold. where you're about to break out again, and silver just quite hasn't yet. We had those August 18 calls. We bought them. We actually sold most of them just a couple days after we bought them. Silver has since pulled back. It had like a one-day pullback. I'm actually looking, depending on what happens on Monday, to add back into that position. One thing that won't be appropriate for most of our listeners is I'm also looking at playing it through the futures contracts, but that's a lot more complex than just going and playing the SLV ETF, which is how most people should play it. But I'm kind of looking at a couple different ways to play silver here. We played gold through the GDX options, so through the gold miners ETF. It's a great way to play gold. There's more volatility there, so there's more money to be made. We're still holding a small position in that, but I could look to add back to silver. I'm not ready to add back to gold yet. I think I need to see a little bit more of a pullback to be able to add to that. But silver, I think, is probably the best play right now. You can even look at copper a little bit, and I won't go too much into it, but that's purely cyclical. But copper, you could play in a pretty tight range right now. As it looks like it's about to move a little bit higher, you could put a tight stop in there if you want to play through futures, but I would recommend most people probably stay away from that.
Agreed. Well, that wraps it up for my end, I believe. I don't think I have anything else to add at this point.
Yeah, no, I agree. Great to be back recording. Looking forward to hear from our viewers and everything. Don't forget to hit the like button, guys. Don't forget to subscribe. And, we'll get back to putting a video out at least once a week here. Maybe get some short videos out just as things happen throughout the week. So let's go out, let's have a good week, and let's make some money.